Hey guys, Ken Boyd with the Accounting Accidentally website. I wanted to discuss a blog post, what the Amazon Fedex dispute teaches us about cost allocation. So, particularly with COVID going on, we see dozens and dozens of delivery trucks on the street. We're shifting to a e-commerce buy remotely and delivery process during the pandemic, and it's only gotten bigger. So if you're one of these shipping companies, like Amazon Prime, you have to think about your shipping costs and how do you properly assign costs to each source of revenue. And it's a problem if you don't get this right, because if you don't allocate the costs in a way that makes sense, your financial results will become distorted. You don't really know how profitable a business line is if you don't assign costs correctly. So I want to talk about a 2020 dispute between Amazon and FedEx. What the Wall Street Journal explained is that Amazon notified third-party merchants that they could once again use FedEx Ground to ship orders placed through Amazon Prime, and we all know how big Prime is, after imposing a ban on the service because of performance issues, and the performance issues were related to on-time delivery requirements. Amazon, surprisingly, sells more stuff through third-party merchants that use Amazon than from people going directly to the Amazon website. I was very surprised when I heard that. So the issue is that these third-party merchants, independent businesses that sell goods on Amazon, had to find different ways to ship when FedEx Ground was not an option. And that's a big deal because shipping is a big expense. And you see here the merchants had to use perhaps FedEx's higher-priced air delivery or UPS. And the problem is that changed total costs and affected profitability. So when we assign costs, we need to talk about direct and indirect costs, which I mentioned in the Cost Accounting for Dummies book. Direct costs are costs that can be traced, that's the important word, to a product or service, such as leather material and labor costs to make a particular good, like a baseball mitt. Those are direct costs. Indirect, on the other hand, are allocated. These costs are allocated, they cannot be directly traced to a product. So utility costs to run a factory are indirect costs. Utility costs are a great example. So let's go back to that third-party merchant. You can determine the exact cost to ship a particular item, so let's call that a direct cost. And the question is, how much effort do you want to invest to assign the exact cost as opposed to making an estimate? And this is a common problem in accounting. We compare the benefits of getting the information with the cost to obtain it. Fortunately, with technology, companies can nail down the exact cost to ship a product pretty easily. So why is this important? Because the seller can confirm the exact cost to ship, which means the owner can make more informed business decisions about what they ship, the weight, where they ship it, and what they charge. So your choices are add a shipping cost to the invoice, charge a flat rate for shipping that you add to each order, or offer free shipping. So these merchants have some choices here that I have in the graphic. So the lesson here is that every dollar your company spends must be traced, direct costs, or allocated indirect costs to a product you sell. You need to know your total cost to price your product accurately. So that's an explanation of the Amazon FedEx dispute. Remember that you can also go to conference room, the address is right up here, for my online community where I talk about accounting, finance, and entrepreneurship. Thanks so much. We'll see you next time.